Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is February 19th, 2018 edition of Market Outlook. So one thing you can see for sure is we got a nice bounce here in all of our indices. Now, the NASDAQ 100, clearly the strongest, coming closest to the highs here. So it's had more than a 50% correction of the correction. However, as you can see in terms of real motion indicators, is that we're back and testing what I would call what is now resistance level in terms of momentum levels. The weakest link here is IWM, and that basically, in terms of real motion, just nudging back to the 200-day of real motion, which means pretty good resistance. In addition, it's also finding resistance at the 50-day moving average, and it sort of rejected it. So there you have it. For leadership, look at the cues. For distribution and a potential sale that could drag everything down, this particular test of the 50-day and a possible failure here is important. So daily charts across the board looking like it's quite iffy. So let's see what materialized. Now, on a longer term basis, on the weekly charts, you can see certainly the Dow, right, intact, sitting now above the 50-week of real motion. That's positive overall. You can see in the spiders, same type of thing. We tested our 50-week moving average and bounced off of it nicely and back into sort of support here too on the weekly charts of real motion. So there you have it. The key things to watch are breakout over the Friday's high in NASDAQ, which is the 100 above 167, and also on the lows of the last couple days, right around the 151.50 level in the IWM. Those are your two key points. Now, let's take a look at some of the intermarket relationships. We love to look at S&P versus utilities. And right now, this key indicator here, or intermarket relationship, is still at the moment favoring utilities. So that is definitely a risk-off indicator, certainly on the shorter term measurement, which is about the monthly moving average of the ratio. You can see we're trading under it now for a good week or more. So there you have S&P versus utilities. Now, looking at the other key market interrelationships, we've got some dramatic improvement this week. Bonds versus the S&P. Bonds definitely under pressure. The S&P outperforming. That's a good, noteworthy improvement in the market. The other thing to note, of course, is that high yield debt well outperforming the safety of U.S. Treasuries. So what's interesting here is that the markets are recovered, even though U.S. interest rates remain under pressure. The other thing to note is the S&P is definitely not doing as well against gold, or in this particular case, in wood versus gold, you got an improvement. So that is definitely indicating inflationary pressures are definitely showing here. So big improvement overall. You got two of these key 5 market interrelationships improving this week alone. So even though you're sort of in the neutral zone overall for risk on, risk off, definite improvement. The other thing to take note of is that volume definitely was positive for the markets this week as well. Last week, we basically had 4, 5, or more distribution days. And with the rally up this week, we really turned that around. So at the moment, you're sort of in a mixed bag here. You've got about a little bit more accumulation days than distribution. Definitely an improvement here, but you can't say that the institutions here are aggressively buying. And obviously, you can see really strong week. We were up between 4 and just under 6% across the board. Very, very strong week and a strong recovery, putting the indices up on the year. Now, in terms of sectors, what we want to do is see if there's any improvement in the 6-month return. That's a pretty good metric in terms of the overall condition of sectors contributing to the advance in the market. And one thing we certainly did is in consumer staples, we moved into a positive overall return. That's definitely a help. So there was some improvement in sectors. One thing is that the semis definitely took some leadership here. Technology pouring on again. So growth stocks basically looking strong on a relative basis. So there you have nice improvement. The other thing is the industrials had a very strong week as well. So two things to note there. Now, in terms of market hotspots, something to also take notice of is a sector ETF. XME, helped by steel and copper this week, really took off. You can see the leading sector here, or one of the leading assets in terms of ETFs is XME. It was up over 11% for the week, definitely helped by copper. Obviously, other things that moved up nicely was Africa, EZA. I mean, pretty decent volume and moved into a bullish phase as well. So there you have the overall scenario for the markets. You've got definite improvement, although on the daily basis for stock indices, you're basically in the mid part of a retracement. And now we're going to see what it's made of. And in essence, looking at the high and low, the high put in on Thursday or Friday is the key level of resistance to clear in order to get an up move and potential test of the all-time highs. On the other hand, that failure of the IWM at the 50-day moving average could definitely mean a drag on the rest of the indices and a test of the recent lows. All right, let's move on to the premium section next.